We are not financial advisors. This is for entertainment and education purposes only. This video is not financial advice. You can lose money investing. You are liable for any losses that you incur from investing. We shall not be held liable for any losses you may incur while investing. Contact the licensed financial professional in your area for professional advice. Always seek independent financial advice before making any investment decision.
Hello, welcome back to ABCC's podcast. My name is Marcus and I am the Business Development Manager at ABCC. And I'm joined here once again with Alan, who is our CEO of ABCC. We are actually continuing on from our previous podcasts on the DeFi topic. And this time around, we will be talking more about the DeFi projects.
We're just talking about like projects right now and what they have been doing so far. I think Curve Finance has been on a couple of people's eye, if not many people's eyes. And a general background of like Curve Finance is like they were started in January 2020, if I'm not wrong. And they started off becoming like doing a lot on stablecoin trading. In fact, providing like extremely efficient stablecoin trading, if I can say.
I think like for Curve, like how they try to break in, like when all the like Uniswap other DEX was playing, is they had a really strong focus just on the stablecoin.
Yeah.
AI, USDT, USDC, etc. Which actually gives, and then the idea of that is because if traditional speaking, like what's traditional in crypto speaking is when you trade crypto, like we trade stable coins, sometimes there's still a high slippage. Curve Finance is there just to make sure the slippage of the stable coins is very low, and also the fees of the exchange is also low.
Right. Yeah, you brought a very good point, actually, the slippage, but yeah, I think it means that. Yeah. So yeah, in fact, to add on to that, like to add on to what Alan said, it's actually very apparent because to put everything into perspective, like the total volume on like all the DEX out there is about 980 billion over the past 12 months. And Curve share in that is actually 70 billion. So Curve actually forms like 8% share, which is actually very huge, I would say, because there are there are like hundreds of DeFi projects out there, but Curve forms 8% of the total volume, and that's why there are more and more eyes on Curve, and Curve actually took up a very interesting approach. They did not they entered on the blockchains that are not on Ethereum. so that's the interesting part. That's why you can see like they probably maybe it's just a theoretical thing, but maybe they just don't want to fight against other projects like Uniswap, and they want to have their own niche. We don't know.
And also, I think the gas fee also something that puts them off. Maybe on Ethereum, like a lot of other EVM chains have a lot of opportunities, but definitely they're still a long way before they can complete with the Ethereum ecosystem.
Yep, I agree. I think why it's gonna be a long way is what we're gonna probably talk about a little bit later on as well. Okay, so on the project of the third DeFi project that we will probably touch about is actually Aave. Aave is actually extremely interesting. Alan, do you want to share your views on them?
Yeah, I think definitely. For Aave, like in my opinion or how I look at it, Aave is like the way they provide it is like a bank. So like traditional speaking, bank clients make a deposit to the bank savings account, and then the bank will lend out the savings for high interest to make a profit. This is exactly what Aave is doing, but they're doing it on the blockchain through a smart contract, which actually provides more transparency in terms of the whole platform. Because like technically speaking, in banks, the best for individuals like us to check is only through the like a quarterly report if they're listed. If they're not listed, it's probably harder for individuals or the bank customers to look at where their money is landed to or where money.
Oh yeah, that is definitely true.
Yeah. So for RFA, I think that's provide a transparency on that. That's why a lot of people have put their money in. In fact, there's almost 19 billion has actually locked, or the value of USD locked in RFA. So what 19 billion means is, so if you see that if we count all the DeFi DVL, so the whole market of the total value locked in DeFi is 75 billion, and RFA is 19 billion.
Wow.
So it's almost more than a quarter of the whole DeFi market is on RFA.
Wow. And that actually explains why they have been so strong as well. I think it's 1/4 of the entire DeFi space of total value lock.
Yeah, I think one of the reasons is they have a mechanism that's for any user who wants to borrow their money on the RFA protocol, they will have to make a deposit of another assets which acts as collateral. So if you think of it traditionally, it's like you need to mortgage your house to the bank and then before they can lend you money. So I think it's similar to that, or when you do financing with your car. So they will lend a percentage of the collateralized assets to
That's interesting.
Compared to the value, yeah. So for example, let's say for Ethereum, there's 3,000 USD now. So if you deposit Ethereum in to the RFA protocol, you can borrow up to like 50%, 60%. Depends on which version of the RFA protocol you're using.
Yeah, I believe they also have like the non-collateral lending or something like that also, if I'm not wrong.
I'm not sure for the non-collateralized lending on RFA. I think not on RFA. I think some other DeFi project does offer that.
Right.
But those non-collateral lending is like
way higher risk, right? If I'm not wrong.
First, it's way higher risk for the lender.
Yep.
Like for the person who is lending money to, but the borrower, they also require like really strict KYC. So yeah, so like let's talk about the fourth project. Since we talk about the non-collateralized lending, there's a project. It's called Trufy. I think it's it was from the team of TrueCoin. They have a non-collateralized lending for some of their partners company like Alameda Research or Block Tower, which or even Wintermute, that like those well-known market makers in the crypto space. Yeah, so I think for RFA, this mostly is collateralized lending.
Okay, so I think probably on this projects is a good feel of what the DeFi space is actually building and what they are actually giving to the users and the investors to help grow your own portfolio. Okay, so the part of DeFi that actually forms I would say the skeleton of it that users or investors participate in is actually like DeFi staking is part of it, yield farming is part of it, and things like DeFi lending is part of it. So all this has, of course, the risks involved. I think one of the biggest risks involved is the impermanent loss. Other than that, I think a lot of people have come to us and asked us about. I mean, for me, especially on a personal level, my friends and relatives have asked me a lot of questions about all this. if we were to explain it over the podcast today, you'll probably take a couple of hours, I would say. So the more interesting part that we'll probably touch on are probably not this, but I wanted to share with our listeners today on this very interesting part that I found in the DeFi space, and that is actually the large institutional transactions part. Earlier, I think earlier Ellen mentioned that the DeFi the total value locked in DeFi was I think 70 plus billion. And this news actually just came out. While the 75 billion was probably, I think, a couple of weeks or 1 month ago news, if I'm not wrong. And this 200, there are actually 239 billion total value locked right now in the DeFi space, is because of large institutional transactions. And why I say that this is actually extremely exciting is because if we take it in comparison, in 2020, there was only $601 million in total value locked in the DeFi space. And we fast forward right now to today, of 239 billion locked. So it's a 40,000% rise, nearly a 40,000% rise, which is absolutely insane. And it's only a matter of 2 years. So per year is like 20,000% increment. And why is that so? Is because like I said, this topic of DeFi is getting more and more mainstream. Even in the crypto scene, it's getting more and more mainstream, and people are noticing it, and people are understanding how the system actually benefits, if not benefits the whole crypto scene and investors and users alike. Whether or not you are a builder or whether or not you're an investor, it actually benefits everyone. And the global financial services market in 2021, which was last year, was actually worth like $23 trillion. And the funny thing is DeFi forms 1% of it. So you may think that, it's very, very small, but actually 1% against the entire global financial services market is very crazy. It's very, very crazy. It's already a huge, huge, huge percentage and a huge amount. And we even see that this thing that this percentage might even increase on in the next couple of years. Imagine if it increases to 5%, is another $1 trillion dollars into the pump into the DeFi space. So if it hits that, you know that there's a lot of potential and a lot of exponential growth to be seen. This is just one of the things that I think may happen. But whether is it true or not, nobody knows. So we are just bouncing off ideas here as well. Okay, so I think everyone has heard a lot about what we have to say today about DeFi. In fact, this is just like the tip of the iceberg, if I can say. There are a lot more things that it's up to you to, like we always say, DYOR, do your own research. And we can only say as much and we can only share as much here. And if you really like what you're hearing today, and you really want to see if you can join us on more of this, do note that we would most probably be doing this on a weekly basis. So yeah, we will be more than happy to hear your comments and see how we can improve or how we can make things more interesting for our listeners as well. Yep. I think on that note, thank you so much everyone for your time.
Thank you everyone for joining in today. Definitely see you guys again next week.
See you guys next week. Bye-bye.
Bye-bye.